The next part of audit planning and fieldwork is on the audit program. First of all, we have to know what is audit program. It is a list of procedures and guidelines that an auditor will perform to obtain audit evidences. To check whether there is the presence of misstatements in the financial statements or not. The purposes of audit program are: firstly, it acts as a guide for the audit staff in doing their audit work. Secondly, it helps to manage the data collection and evaluation process. And third, it provides the basis of coordinating and supervising audit work. Types of audit program consist of standard audit program and tailored audit program. Standard program is a standardized set of instructions or procedures which are to be followed during audit work. It prescribes the procedures that are to be followed during each situation happened. It helps to save time and cost but is very rigid as it is difficult to follow the same audit program over the years. Tailored audit program does not prescribe the exact procedures that need to be followed. It contains outline of the scope, nature and limitations of the audit assignment. It is very flexible as auditors can modify programs according to the situations, but some important procedures may be ignored.
Audit documentation is known as auditor's working papers, which is conclusions and evidence for presentation. The purpose is to facilitate planning, performance and supervision of the engagement, for audit quality control purposes, retain records for future audit and evidence that supports auditor's conclusion to reviewer. Reviewer here are members of engagement team and new auditors to review prior's documentation. There are two types of files: permanent files and current files. Permanent files contain client's historical data. Purpose of this file is to keep relevant information for upcoming engagement. The contents are minute of board meeting, lease agreement, copy of AO and MO and letter of engagement. Current files contain client's current engagement and data. It acts as evidence in planning process. Examples are copy of financial statements and auditor's report, audit planning and audit program, trial balance and journal entries. The working papers shall be prepared based on timely basis which contain sufficient record of basis for auditor's report and evidence that audit is done according to the Act. Working papers must have descriptive heading, indexing, cross-referencing, tick marks, source of information and conclusion. Working papers are treated as a property of auditor, and in certain states there are statutes that designated the auditor as the owner of working papers. Working papers serve as useful referencing source for auditor's client. However, it shall not be treated as part of, or a substitute for client's accounting records. Auditor should adopt reasonable procedures for the safety of his working papers and should retain them for a sufficient period for his practice.
Internal control. Management and auditor's responsibilities. Responsibilities of management are preparing the financial statement and creating safeguards to avoid fraud and error using internal control. Responsibilities of auditor are examining management's financial statement and expressing an opinion on their fairness and obtain reasonable assurance about whether the financial statement is free of material misstatement, whether caused by error or fraud. There are three categories of objectives, which allow organizations to focus on differing aspects of internal control, which are operations, reporting and compliance. Operations refers to the effectiveness and efficiency of organizations' operations, including operations and financial performance goals and safeguarding assets against loss. Reporting relates to internal and external financial and non-financial reporting and may incorporate reliability, timeliness, transparency, and additional term as set forth by regulators, recognized standard setters, or the entity's policies. Compliance relates to adherence to laws and procedures to which the entity is subject. There are 5 components of internal control. First, control environment is the set of standards, processes, and structures that provide the basis for carrying out internal control across the organization. Second, risk assessment can be defined as the possibility that an event will occur and adversely affect the achievement of objectives. Third, control activities is the actions established through policies and procedures that help ensure that management's directives to mitigate risks to the achievement of objectives are carried out. Next, information and communication is necessary for the entity to carry out internal control responsibilities to support the achievement of its objectives. Lastly, Monitoring is select, develop and conduct ongoing and separate evaluations. Evaluation of internal control. It involves an examination of the effectiveness of an organization's system of internal controls. A strong system of internal controls reduces the risk of fraudulent activity, which moderates the need for additional audit procedures. The examination focuses on the separation of duties, checks and balances, safeguarding of records, the training level and competence of employees and the effectiveness of the entity's internal audit function. The auditor obtains and documents their understanding of the design and evaluation of the client's internal control systems by internal control questionnaires, ICQs, flowcharts and narrative.
Letter of management is one of the ways for auditor to communicate with client regarding matter done during an audit, which is intended to inform client on any recommendation to improve the business operation. There are a few types of deficiencies that should be addressed by the auditors in letter of management. First is material weaknesses. It is deficiency or combination of deficiencies in financial reporting where its material misstatement is not prevented or detected and corrected based on timely basis. Next is the significant deficiency. It is a deficiency or a combination of deficiencies in financial reporting that is less severe than material weaknesses but requires the management's critical observation and investigation. There are a few key elements of management letter. First is observation. Auditor reports the condition and identify the deficiency and explains why it needs improvement. Next is impact. It is to determine the problem's monetary and qualitative effects on the manager. Last is recommendation. Auditor suggests some alternatives to fix the issues of internal control.